Okay, so making this video is going to be pretty quick. It's not super in detail. I'm going to expand on the points really. Essentially, in my work with a lot of traders who were not successful, who were, they'd admit themselves they're losing traders, working with them from the mental game side of things, and also traders who are very successful, speaking to them both from working with them as a mental game coach, performance coach, and also just other traders who I have known over the years, seeing how they've become profitable, the things that they do that are different to losing traders. And I've pretty much pulled out a few main points that I want to go through, and I've expanded on them. I think there's a lot of value in this, so definitely make sure to watch through to the end. And yeah, I hope it helps your trading performance, this video. Let me know if it does. If you have anything else that you think there's a difference between profitable and losing traders, pop it down in the comments below. So let's start off. First thing, mental game. This is, like I said, the area that I've worked in for a couple of years now, working with traders who have struggled with their mental game, with their performance. And there's a stark contrast between the traders who I have worked with who are very much not successful at all. They're losing traders. They are coming at it with a they're looking for real guidance early on in their journey. And the traders who are either slightly successful, traders who are if the prop firm traders who are getting some cash outs but not able to push that further than that, and also some traders who are really successful. And there's some stark differences. So the main one that I pulled out on is that losing traders, call them losers, focus on P&L. The main driver of all of their decisions and all of their emotion comes down to their P&L. And this makes sense in the fact that, like, we're judged based on our P&L. We judge ourselves, and our performance at the end of it comes down to, well, at the end of the year, how much money did you make as a trader? It's that's kind of it. And a lot of losing traders take that overall mindset and they make it they take that idea and they put it into every single trade every single day, and as a result they're very focused on their P&L. And it's, for me personally, the big thing that when I begin catching myself looking at my P&L a little bit too often, or beginning to go, right, I should be up this amount, or I could be up this amount, or those sort of things, I know that my mental game is slipping, because I've seen it in so many traders who are not successful. So if you chase losses, revenge trade, get anger when you take a loss, you have P&L targets. P&L targets, I think, can be good, but the way most people use them is ridiculous. If you do these sort of things, consider a green day as a good day, then and you catch yourself doing this a lot, then this is a trait of a losing trader. It doesn't necessarily mean that you are a losing trader, or if you are, it doesn't mean you're going to be a losing trader forever. But these are the traits of losing traders. Chasing a loss, if you're down $400 or $500 on the day, whatever it is, and you go, I'm going to keep on trading more, I'm gonna try to make that money back, focusing on the P&L. You could have taken a really good first trade that happened to lose $400. You could have executed absolutely spot on with your strategy, or if it was a mistake, it was the smallest mistake. But because it was a loss, it sends you into this, like, frenzy of, I need to make that money back. And it's similar with revenge trading. Sometimes it could be a situation where you get a trader they've taken a long on a stock, or whatever, and it's gone against them, and then they kind of get into this revenge mode of, I'm going to make money buying this stock somehow. And they 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 react to the result on their P&L rather than what's actually in front of them. And I often ask my clients, what benefit does having the P&L on your screen have? And some of them will say things like, well, it means I know if I've hit my max loss for the day. Like, okay, you know that anyway, realistically. Some will say, well, I'll know if I've hit my target for the day. And I'm like, well, if you've hit your target for the day and you then get an A plus setup that is like the best setup you've ever had, because you've hit your target, you won't take that. That's a negative thing. If your trading has an edge, if you have an edge, then every trade that you pass up that's a legitimate opportunity, you're giving up EV to the market. You're not making money. Even if that trade wouldn't have worked, you've given up money. In poker, it's the equivalent of, like, if you get aces, do you just go, well, I'm already up $100 on the day, so I'm just gonna, I'm not gonna play this hand. I'm gonna fold. I'm gonna leave the tables. Of course not. If you have aces, you want to get as much money in the middle as you can, as early as you can, because you've got a massive EV advantage. What if you decided to fold aces in that spot and there was a guy on your left who had kings and you could have got it all in and had an 80% chance of making another $200 on the day or whatever? Like, you would be insane to pass up that opportunity, and trading is like that. So having your P&L on the screen, there's no real benefits. It only brings negatives. It heightens your emotion. It makes you far more um, reactive to what you've already done rather than looking ahead. And realistically, the, the the biggest mistake I see in a lot of traders is just this, that they're reacting to losses or wins rather than reacting to the charts. And it makes no sense when you put it that way, but we still see a lot of losing traders do it. And the thing I've put here, green day is good. Just because you have a green day doesn't mean you traded well. You can take a bad trade, and I've had it recently where I've got to the end of the day and I've gone, I'm up $400, but I traded horribly. I made three mistakes. One of them happened to work out. Two of them cost me profit, and I missed a trade. So I could have made 3K on the day or 2K on the day or whatever it was, but I'm only up 400. And it's a case of going, okay, how can I make that improvement? But a losing trade will often go, that's fine. I'm just happy to be green, and that makes no sense. You're reacting to P&L which isn't in your control. You can't control if you have a winning trade or a losing trade. And all of this comes back to having a short-term focus. Now, let's look at the opposite of that, the profitable traders, and their focus moves immediately onto the process. The best traders that I've worked with, all of them have gone, I don't care if I take a loss. I don't even care if like I was in a green trade and it was up 2R. If I get out early, if I take it off for if I take it off for like plus 2R, even if that trade would have been break even, I'm annoyed at myself because I haven't executed to my plan. Their targets are not P&L based, they're based on improving their performance. So as a result, they will look through and they're looking for mistakes. They're not focused on how much money they made in a day or on a trade. They're focused on, did I trade well? Because they know if they have an edge, let's say that edge is the equivalent of an average of $200 per trade, right? You risk $400 on a trade. 50% of the time you win 800, 50% of the time you lose 400. So in the two trades you make $400, and the expected value of each trade is therefore plus $200. Let's say they have that kind of edge. Well, they know that all they have to do at that point is execute really well. So there's no point looking at the P&L. There's no point going, oh, I'm up 3K on the day, I'm going to stop trading. If there's an A plus opportunity, their goal is to keep trading that opportunity really well. They're looking for the mistakes, and they're trying to look and implement improvements, because they know that if they can make an improvement today, it can improve in the future. And a really easy opportunity a really easy example rather that I can give you is yesterday I missed a really good long opportunity because I was focused on shorts. And I look back over the day look back over that opportunity about half hour later and went, oh my God, I missed a really easy, clear long opportunity. And I caught that as a mistake. And today, the very first trade that I took was a result of that mistake. I made an improvement. I went, okay, I was looking for a long, but then I reassessed the market and I went, I could also be looking for a short, so I'm going to be open to looking for both sides. And I got a setup that gave me a short, and I took it, and it ended up being a really nice trade. It was a winning trade, but the main thing there was my execution and my performance improved because I found a mistake and I implemented an improvement. The whole point of this is a long-term focus. If you keep on making improvement of 1%, 2% a day, if every day you go and you go, how could I have improved today? And you try to implement that, then after a month, 2 months, 3 months, you are going to be crushing it. There's so many different resources out there that harp on about growth mindset, and I think it's the one thing that traders should really look at. I know some really top level poker players say you should be playing in the hardest poker games out there, not to make money, but to improve your edge. If you speak to a lot of the golfers who hit the ball like miles, Bryson DeChambeau, for example, he's really big on like you swing harder and harder and harder and harder in practice so that your average is is also quicker. There's this big, it's the same in trading. You have to keep on looking for mistakes to make an improvement so that those improvements over time compound. That's the main difference on a mental game perspective, profitable traders and losing traders. Profitable traders look at how they can improve on their performance. Losing traders focus on how much money they've made or lost. Let's look at strategies. So a common trait I see in losing trades, and this is something I did for years, it's something that speaking to traders who are not successful, they all seem to do. They jump from strategy to strategy. They take a strategy and they go, this looks kind of good, and they trade it for a day or two, and they're very quick to then say that did or didn't work. And let's say it doesn't work, they don't have success, they begin looking around for another element they can add to it without any real in-depth um, data analysis. They haven't looked at the strategy in detail. They've had 2 days where it hasn't worked great for them, and they're already making a major change. And then they see, oh, you know what? I could have done better over these 2 days if I'd added this, and they just throw that in straight away without looking to see if that actually benefits them or not. Or sometimes it could be a case of they go on YouTube and they see something like, you know what? That guy trades kind of cool. I'm going to try the way he trades or she trades. And as a result, that jumping means that you never actually get particularly good at a strategy. And I like to use the analogy of, think of yourself an Olympian, and to start off with, you want to be a high jumper. And you try high jumping for a couple of days and it doesn't work out great. So you go, I'm actually going to try pole vaulting. It's similar. You're jumping over something. And you try that for a couple of days. Go, that doesn't work for me. I need to keep on the ground. I'm going to go with long jumping. So you try long jump, and then you're not great at that after a couple of days. So you go, actually, I'm going to try move to triple jump because I feel like my run up's similar to a triple jump. There's no way you're going to actually get to any decent level with that approach. Whereas the top athletes will go, I'm a 400-meter runner and I'm going to get really good at that. And maybe after a year they go, you know what? I find at the end of the races I've still got more to give, so maybe I'd be more inclined, more suited for 800 meters. But they do that after a year. They don't do it straight away, right? So jumping from strategy to strategy is a big trait of losing traders, and this can be literally, like I said, from one thing that's slightly different to another, slightly different to another, or they go from trading reversals to trading breakouts, and it makes no sense whatsoever. Another thing is thinking in terms of absolutes. They're not looking at the chart or looking at a strategy and going, there's a 70% chance I have a winning trade here, or my strategy historically shows that I'm going to make this, I'm going to win here 50% of the time, whatever. They're looking at a case of saying, okay, this works, so I'm going to trade this, and it should work every time I take it. And therefore, they expect to have profitable results. When the reality is that they could actually be trading a profitable strategy, and they happen to trade 2 days where it doesn't work out great, they take some losses. That doesn't mean it's a failed strategy. It means that it didn't have a couple of good days. It had a couple of days which weren't that great. And then a big thing that I see as well is a lot of losing traders, they complicate their strategies. They either add indicators onto their chart, or they begin using like 4 or 5 or 6 different time frames. And the reason I think is they they will believe that the more things you add, the higher quality decision you'll make. Or maybe the more things you add, the less thinking you have to do. And the problem is when you have a complicated strategy where there are lots of potential points where you can make a mistake, the likelihood of you executing at a high level drops significantly. I've worked with traders who had most success when they simplified a strategy down to, I'm just going to trade flags after we've had a move. And they've had success with that. And then they've added things into it going, okay, well, now I'm going to have rules where I can only take flags based off of this. And I'm only going to trade flags if a higher time frame candle closes red if I want to short. And they have more and more things. All of a sudden they're you have the situation where you're executing really poorly because you've got a strategy that's very complicated to execute. I've worked with a trader who had like 2 indicators on their chart, was finding success, and then they went through a poor period and they added 2 more indicators, and then they changed the time frame. And it was like, you're making these changes on a very small for a very small reason, which is you had a couple of bad days, and you're making it more complicated and less likely you're going to execute it very well. Now, if we flip over to the profitable traders, Normally, profitable traders stick to one strategy, and it might be they have a variation of one strategy. It might be that they trade breakouts or breakdowns, and they have variations of the type of entry they get. But for the most part, it's one strategy. And what I would encourage you to do, if you are a losing trader, is perfect one strategy. Find one thing that you can be very confident works and become the master of that. I like to use Matt Diamond as a great example. He's a breakout trader, trades Tesla and Nvidia and stuff like that. And he spent, I think it was 3 or 4 months where he went, this is what I'm going to trade, this exact strategy, and I'm going to just get really, really good at that. And guess what? After 6 months of doing that, he was really good at it. He's now a very successful day trader because he stuck to one approach. He didn't go down the route of like, oh, could I add something here? Could I try to improve it? He went, this works. I'm going to become the best trader or one of the best traders at this particular strategy, and that's how I'm going to make my profit. Profitable traders will also use longer term data and analysis to see an edge. They're not going to simply go, oh, look, this short worked today. This is probably a strategy I should use from now on. Instead, they're going, okay, where was the best opportunity each day for the last 30 days? What did that look like? What did that situation look like? And they do that for, say, 30, 40 days, and they begin going, you know what? 25 of these days had a very similar setup before the big move. So then they take that setup and then they go, let's now look at 100 days or 200 days and identify that setup and see if it gives potential, gives good potential in those situations on other days. And they look back and they go, you know what? I could go back to a random month. I did this. I went back to June. I was like, let's see if it worked in June. I went through, and after 15 days, it was like, yep, this gave 25 setups and worked 21 times. It's like, I can be pretty certain that this situation and this strategy works because I've got a much longer time frame of data. I'm not going, this worked today, so it'll work forever. Also thinking in terms of probabilities, understanding their edge. For me, my strategy works in the ballpark of 65 to 80% of the time on average. Profitable traders are aware that they have something and it will work 60, 70, 80% of the time, whatever it is. And because of that, they're able to accept a loss. They go, losing is part of my strategy. I will take a loss once every 3 trades on average. So that can also mean if you have a couple of days where you don't take a loss, what I will often find, so I've had 2 days in a row where it's like I've only had 1 losing trade, I've had like 6 winning trades. I kind of check myself and go, my strategy has performed better than its historical average, and I shouldn't get used to this performance, right? When you begin adopting that mindset, it's a lot easier to go, okay, let's keep our feet on the ground in those sort of situations. But also it means that if you take a loss, you go, okay, this is fine, this is part of it. And then the big thing is you see a lot of profitable traders with simple, easy to execute strategies. I'll bring back Matt Diamond as an example. His strategy is incredibly simple and it's easy to execute. And all you need to do is spend 3 months getting really good at it, and then you're going to be very successful. There's not a huge, there aren't loads of different moving averages. I think he uses VWAP and the 9 EMA from memory. I haven't watched his videos for a while. A lot of the stuff, I uploaded the video the other day on how I got funded. Strategy is very easy to implement, very straightforward. And when it's easy to implement, when it's easy to execute and it's simple, it means you're more likely to actually execute it at a high level. The irony, of course, is that most simple strategies are better than complicated ones. But let's say, for example, you had a complicated strategy that returned you an average of, say, $200 per trade. Or you had a simple strategy that returned you an average of $100 per trade. The complicated one's better, right? But if the complicated strategy, you're going to make a mistake 2 out of 3 trades, well, now you're actually trading a negative EV overall. Whereas if the one that's making it, the simple strategy is making $100 per trade, if you're able to trade 4 out of 5 correctly, you're still able to make money. So a lot of profitable traders, they have a simple, easy to execute strategy, which means that they're able to perform at a high level for longer periods. And then finally, how they trade. So this, I think, is you might think this is similar to strategies. I've tried to differentiate them slightly. So losing traders will take every setup they see. They will take every single flag. They will take every breakout. They take every breakdown. They will go, but this is my chart pattern, so I'm going to take it. And what I have found and what I've seen with a lot of traders and in my own trading over the past as well is that if you're just taking every setup, then you are often trading in negative EV or negative edge situations. And that's why so many traders end up losing. They're trading a chart pattern without any context. And the problem with trading chart patterns without context is quite often you're not going to have an edge in the situation that you're in. For example, if it's midday and you get a really clean breakout opportunity on a stock that isn't doing very much momentum, it hasn't got very much momentum, hasn't been doing much volume, and it's in the middle of nowhere on the daily chart with no real reason to break out. If you try and take that breakout, most likely you're going to take a losing trade. It's going to be a failed breakout, probably upwards of 8 times out of 10, honestly, because it's not a situation you have edge in. Whereas if you have that exact same chart pattern setting up at 9:45 a.m. on a stock that has recently had some pretty good news, it's been bullish and it's breaking out of a major daily level, and everybody's talking about it. Everyone's talking about when it breaks over this level, it's going to rip higher. The probability of that breakout working is probably 80% of the time it's going to work. The difference isn't the chart pattern, it's the situation they're in, which is more the profitable trader side of things. But losing traders essentially take every setup they see. Losing traders will emotionally change with their results. So their results, this comes back to the P&L thing again, like they will swing from being really happy and elated at taking a win to being really upset and angry with themselves they take a loss. And that comes out in their trading. Maybe how many times, for example, have you in the past had a winning trade, small winning trades that you've been looking for ages for taking a trade? I'm not going to take a trade. I'm not going to take a trade. I'm waiting for a setup. You take a trade. It's a small winning trade, and then you immediately jump into another trade and you wipe out the profit and more. That's emotionally changing with results. There's a lot of what a lot of losing traders do. Trading multiple strategies, right? And this again comes back to having one strategy. A lot of losing traders will go, oh, they won't have maybe a defined strategy, which is the next point as well, but they'll have multiple different ways of doing it. Oh, I'll go long off this support. I'm going to buy this breakout. I'm going to short this resistance. I'm going to buy off of VWAP. I'm going to short using the 50 EMA. I'm going to buy the break of this trend line. The problem with using multiple strategies is you never specialize in one, and you need to be in the top 1 or 2% of traders to be profitable. That's specializing. The problem a lot of traders I think have is they've watched so many different people trade. They've got so many different potential ideas of how to trade in their head that they just kind of do everything, and that doesn't work. And then finally, losing traders don't normally have set rules, so they're guessing in trades. And what I mean by this is when you have a trade and let's say you go long, do you know exactly where your stop is going to be before you take that trade? Do you know where your target's going to be? Do you know what you want to see in the trade to adjust your stop? Do you have all of that in mind ahead of time? If you do, or sorry, if you don't, then the moment you take that trade, you're going to trade emotionally because all of a sudden you've got risk on. Emotion will skyrocket. You take a trade and you're like, oh my God, I could lose $400 on this trade. Oh, it's going in my favor. I should lock in some profit. You're going to react based on emotion because emotion is stronger than logical thought, and then you're going to make mistakes in the trade. If you don't have those set rules in place, or you're not really strong on them, then you are opening yourself up. And this is the big theme that you will see, that losing traders, they open themselves up all of the time in every element of this, whether they're trading based on their P&L. They've got their P&L on the screen next to them. They're taking pictures and sending it to their friends every half an hour. Or they don't have set rules. They're opening themselves up. These tiny ends that you could tie off, if you like, these loose ends. They're opening them up to trade badly. And once that starts, it's very difficult to actually change. Profitable traders, on the other hand, will only trade in situations they have an edge in. And this can be all different types of edge. It could be we've got a major breakout level on the daily chart on whatever they trade, and that this is a situation they know historically has led to the biggest bullish moves. When we get the breakout and it's a key daily breakout, this is a situation they know they have massive edge on to go long. Or it could be that you have a trader that goes, I'm really good at trading a certain type of news. So they wait for that news to come out It might be low floats. They might know a certain type of news that seems to always make them spike or always makes them sell off. So they will be scouring and looking for that particular type of news to know I have an edge in this situation. Or it could simply be chart patterns, similar to how I trade. Use an element of, okay, we've got a key level here that was support before. It's use it as support again. If we hold this area, I'm in a situation that I know I now have an edge in to go long. Or it could be, we've broken over a key level. If we pull back and begin holding, this is a situation I know I have an edge in to go long. I'm not going to trade any other times apart from when I know I have an edge in the situation. Using techniques to reduce emotion to keep trading their plan. And it's important to have these ahead of time. Saying things like just keep calm and trade your plan doesn't work. You need to understand where the emotion's coming from and have something that's actually strong enough to counter the emotion. Let's say it's P&L based. Let's say you're a prop firm trader and you're worried about the trailing drawdown on an eval account, right? Having something that will go when you begin having that emotion, like, oh my god, I've lost the trade, my drawdown's now at 2100 rather than 2500. It's being able to remind yourself saying, I've only paid $20 for this evaluation account. I don't need to worry about the trailing drawdown. I just need to worry about executing accurately. And if I get funded on this account, great. And if I don't, I can get another one for a very small fee, as an example. But making sure you have something beforehand that you can use is critical. Specializing and mastering one easy, reliable setup. This is something that I really learned from S&B Capital. The big thing that they say over there is identify where you have massive edge that happens again and again. So like 70% win percentage potential. Specialize in that. Don't worry about all the other opportunities that are going by. Specialize in understanding which situations you have massive edge in, what your entry, exit, trade management plan is in those, and become the master of that one setup. The crazy thing is, if you did that right now, if you went away and you went, right, say you're a future trader and you go, right, I'm going to pull up a chart of NQ and I'm going to identify where the easiest opportunity was today. And you do that every day for a month. You are going to, at the end of that month, or maybe even less than that, you could identify something, you could look back over past 30 days, you'll be able to identify the setup that gives the easiest opportunities for big returns. You can turn that very quickly into a strategy, and then your goal is over the next 6 months to be the best person in the world at trading that type of strategy. And you do that, you're going to become successful. And then finally, having set rules so there's no guesswork, no relying on intuition too heavily. This is a big one. A big difference. A big thing I see with a lot of losing traders is, like I said before, they have those. They don't have clear rules, so they take a trade and I took it off because I felt like it had gone enough in my favor. Whereas, successful traders go, I took this off because it hit my target, which historically has shown to be towards the upper ends of what I can expect, right? Or I took this off because it was very close to my target, but I was seeing that price was starting to slow down, and giving back 90% of my profit doesn't make sense in this situation. Or I moved my stop because price had gone a certain amount in my favor, which would tell me that this should now continue in my favor. And if it doesn't, then it's going to hit my full stop more often than not. So I'm going to move my stop closer to my entry. Okay, having those set rules based on historical data, based on something like that, is so important, because if you rely on intuition, well, your emotion's going to take over and you're going to suck. So those for me are the three big areas on the difference between emotional or losing traders and profitable traders. I would highly encourage you to go back through this, and if you do any of these things as a losing trader, go, okay, how is it different to the profitable trader, and what could I do to change that? If you keep jumping from strategy to strategy, how could you change that? If you emotionally change with results, how could you begin making changes on that? This isn't an exhaustive list. There's so many other things that profitable traders do really well and losing traders do really poorly, but it's a good framework to go off of. And if in 6 months' time you set the goal to be that you are on the right side of this list on all of these points, I would say that you have a very, very high probability of becoming a successful trader. So like I said at the beginning, if you found this useful, leave a like and subscribe. If you have any other things that you've seen in losing traders and profitable traders, make sure to put them down in the comments. Check out the other videos I've got on my channel. I share videos of my own trading. I trade the Nasdaq futures with Apex prop firm. If you're interested in signing up with them, I've got a link down below. You can use my coupon code if you want. I don't, I gain such a tiny amount from it. I don't really mind. Just make sure you get the best deals if you do go down that route. And I also have videos on how to improve your performance as a trader. I have been a mental game coach for a couple of years now, working with traders to improve their performance. So check all that out, and I'll see you again in the next video.